What they've done over the years is turned it into almost $4 trillion business brand today. This is an unbelievably great company.
If we go back a year, it's on about a 92% share increase in the last year alone, which is incredible for a company that's been around for over 20 years.
I see there's a lot of bets on this company. As we mentioned as well, quantum computing is one of the growth area. I personally think they will be one of the biggest beneficiary from this AI revolution.
What's the number one risk to Google today? Welcome to the latest edition of the Intelligent Wealth Podcast. With me, as usual, we have Awet Ghirmay, Head of Research at Minerva Money Management, our fund management business, and my fellow director, Carl Roberts, and myself, Tony Byrne, hosting today's show. So just wanted to briefly mention what the podcast is about and who it's for. It's really designed for serious investors who want a bit of help in their research into companies they may wish to invest in. The companies we feature aren't necessarily ones that are in our fund. Some are, some aren't. It just so happens Alphabet is, and we'll explain why in a moment. What we'd like to do is give you value. So one of the things we will produce for you and be available for you, which you'll find in the show notes afterwards, is a one-page company snapshot of Alphabet. We offer that free of charge. You're more than welcome to ask for a copy, and we'll provide it to you, and hopefully it'll help you with your own research. Obviously, any comments in this show are just our own personal opinions, whether we have the company in our fund or not. So please don't rely on it as advice. I want to give just a little bit of background into the Alphabet that we're covering today, better known as Google, of course. Now, Alphabet was formed by two Stanford students that you're probably aware of, called Larry Page and Sergey Brin. What they've done over the years is turned it into almost $4 trillion business brand today. And funnily enough, when they first created the company, there was misspelling of the company. They didn't call it Google. They called it Googol, Googol, and it was accidentally changed to Google. So I just wondered how they got that name. Interesting. They had a mission to organize the world's information, and that still anchors their entire strategy. What's interesting about these people, there is skin in the game. In other words, the founders do still own shares, but they don't own a lot. Total insider ownership of Alphabet is 6.3%, which is a bit below what we'd prefer, but it's not bad. The CEO, Sundar Pichai, I hope I pronounced that right, he only owns 0.19% of the shares, which is still a tidy $734 million. I'd love to have such a small shareholding, wouldn't you guys?
Of course.
Sergey Brin has got far more shares. He owns 3% of Google still, and that's worth a whopping $62 billion. My goodness me. Incredible, isn't it? So this is, even before we get to discuss it, I can just say this is an unbelievably great company. It really is. I don't think that's too presumptive to say that before we get into the heart of it. Over to Carl to give us more meat on the bone with some more concrete figures. Carl, what do you have to say about Google or Alphabet?
Yeah, thanks, Tony. Alphabet, comes under the tickers GOOGL and also a separate ticker GOOG. And it's worth just explaining that, because if you're looking to invest into Google or Alphabet, you want to be clear on what ticker you're actually buying here. So basically the GOOGL ticker is their Class A shares, and the GOOG is their Class C shares. So the Class A shares, a lot of big companies now do something similar to this. Obviously, as the owners of the business, when you float it and make it public, you're obviously giving up shares, but you want to maintain that control of the company and the direction of where it's going and making all the strategic decisions. You don't want to kind of dilute your power in the company. So what Alphabet did was they created the Class C shares to allow employees, so be able to give employees incentives, new shares, and also other people that come and invest, still ownership of the company, and therefore benefit off the back of Google's success, but not have the voting rights like the Class A shares do have. So that's just an important distinction. I mean, effectively, you invest in either, you're going to get the same effective performance, but just so you know why there's two different tickers there. Obviously listed on the NASDAQ, listed back in August 2004. So still, I mean, it's coming on over years now, but so actually you still sort of think of Google as a relatively young company, but actually it's been around for quite a while now. Market cap of around 4 trillion. That could have changed by the time this episode goes out, because this is now moves quite fast now between these, what's a trillion here and there with these big tech companies. And this is definitely one of the biggest companies in the world and forms part of what's called the Magnificent Seven in terms of tech companies. So just looking at a bit of past performance, if we go back 5 years in terms of just before, they've had a real takeoff in this year alone at the Google share price, Alphabet share price. So if we go back 5 years, just before the recent takeoff that happened start of January, they had a compound annual growth rate of around 23%. If we then add on this year's or since January performance, it goes up to about 30% compound annual growth rate over the 5 years. If we go back 10 years, we're looking at a 24% compound annual growth rate. But it's this last year in particular. So if we go back a year, it's on about a 92% share increase in the last year alone, which is incredible for a company that's been around for over 20 years and is one of the largest companies in the world to still have grown its share price effectively nearly doubled it. So yeah, it's an incredible bit of performance from Alphabet. And I think Alphabet are amazing in one sense, in that usually a company is very good at one thing. Alphabet tends to be very good at lots of things, and it's been able to maintain that collection of companies, because I can't remember the exact figure now, but there's lots and lots of underlying companies that form part of Alphabet now. We obviously know some of the big ones, YouTube, is it Waymo as well, the driving company, and many others. So there's a lot of underlying companies that all kind of contribute to our Alphabet success, but they all seem to be relative leaders in their fields as well. So there's lots of space for Alphabet to go into lots of different areas. And many people would say, actually, is it stronger if you split those companies out and let them go off on their own? But Alphabet seems to do a really good job of just kind of maintaining it all. They are heavily reliant still on the Google search. So that is their main revenue generating product. I think over 50% of revenues still come from Google search advertising. And obviously there's a big elephant in the room, which is AI, and that is starting to eat into Google's sort of traditional search results and business. So it's an interesting point now is how they combat this and how they develop. And obviously they're doing a big AI drive themselves. Google's Gemini seems to be really successful and gaining a lot of traction. So they are big in the space as it is. But obviously they've got to if everyone's going to stop using Google search, which I certainly are finding, I use that less and less, and are going to the AI models to find information because it's so much quicker and it gives you the answer rather than having to scroll through websites. They're going to obviously have to find a way to push advertising through their AI model in order to keep up revenues. But what they have also done more recently in the last few years is they've realized, obviously, with the AI and that data centers are huge. So their Google Cloud business is obviously taken off as well. So they are now starting to see a lot more revenue growth through Google Cloud. And I think there's essentially only really 3 big players in that market, isn't there? Cloud Engine, you've got Amazon's, and then you Google Cloud. So they're in lots of kind of good areas. And we haven't even touched on kind of mobile market and their Android system, how it might have more on that. Yeah, really, really interesting company.
What can you add to that, Awet? Because I know I think you're a fan of Google, aren't you?
Yeah, I'm a big fan of Google. I think this is one of the best companies we've seen. I've seen in myself in the last long time. I think recently, what we see, even Warren Buffett, the way he described it, this is the company that he regrets not investing. And he always think like one of his insurance company were spending a lot of money for advertisement. I'm not sure, he said, I'm not sure how I missed Alphabet. And he waited for long and he waited, but recently he took a position in Alphabet. I think he disclosed it in the last quarter. And when we look at Alphabet, I think this is one of the best company in the world. And it's the company that not just AI company, it's a hardware platform that could, integrated AI into whole ecosystem. And, when we look at Alphabet deployed AI across pretty much 15 products, and there are 500 million users for its AI product. And just makes it more robust. When we look at AI currently, you look at Microsoft, Apple, and so on, they tend to rely on other providers. Like, for example, Microsoft, they rely on OpenAI, where Alphabet has created its own, ecosystem. In fact, a recent when we look at Alphabet, Apple decided to use Gemini for its voice assistant. And recent news as well, AI has, Gemini 3 has been trained on AI on Google, its own chips. And, this is very cost effective in comparison to Google rely on NVIDIA. So this makes Alphabet not just a software, but it's a hardware as well. They will be moving into designing chips, and we can see interest from their chips from companies like Anthropics and Meta and so on. So they are building a business, and there's a multiple bets that they're making because that's related to their culture. Historically, they have innovative culture where they've always been inventing into different multiple front. Not just, even though, as you mentioned, Carl, they rely on the search, but the search business has been given them the capital that they need to deploy into like autonomous cars and chips. As we said, they are designing their own chips now, which are used to train AI and so on. And Google Maps and hardware and Google Pixel phones as well. But the biggest market most people don't see is AI drug discovery. They have companies that they are working on discovery, and the one thing I see AI capitalize on is drug discovery. I think that's the biggest market, and Alphabet has the data that we need, pretty much 30 years of data, the best data available in the world to train and discover drugs. And I think Alphabet would, if they help a lot of companies, they already have a contract with a lot of companies, this would make Alphabet one of the best company. And there would be a multiple front growth instead of relying on AI search business. They will rely on several front of growth. So I see there's a lot of bets on this company. As we mentioned as well, quantum computing is one of the growth area, which Alphabet is significantly making a lot of breakthrough. So when we talk about Alphabet, this is not just a one business. There's several businesses that will come out of this. And I think this is why I mentioned earlier, this is one of the most powerful business that we've seen historically. And it's embedded to our ecosystem. I think earlier on we had an investment committee, and I think we used Google Meet to hold that investment committee. And we always rely on this product, Gmail and so on. It's pretty much embedded into our ecosystem, and they can use that data to train and advance AI. I personally think they will be one of the biggest beneficiary from this AI revolution.
Yeah, good point, Awet. What I find extraordinary, we love companies that have a monopoly or a moat, we call it, a financial moat. Just imagine a castle with this water around it called a moat. Warren Buffett once said that he described one of these companies, it might have been Google, as not just a moat, a castle with water around it, but it's sharks in the water. And I think Google is not just one moat with sharks in the water. This is 6 moats, at least 6 moats. And let me just list them. Carl and Awet have mentioned a number of them. Google Search, YouTube, Google Maps, Android, Cloud, Chrome. There's probably more, but I think you'll find they're dominant in all of these. It's so rare to find a company with a monopoly. This company's got a minimum of half a dozen monopolies, and now it looks like they're going to be world leaders in AI, probably, because they're the only company that's totally got it from top to bottom in every aspect of AI. They've got the whole thing in-house, including their own chips. So I just think it's absolutely remarkable company for that reason alone. Now, I slightly digress here, but I just wanted to give you the benefit of the listeners, the benefit of my personal experience of having visited a Google office in Victoria. Admittedly, this was a few years ago, but remember that film, the Google film comedy? I forgot what it was called. You might know, Carl. Remember there was a comedy a few years ago about an intern. I think it was called Intern, wasn't it?
Yeah.
Based on the Google office, where you go in there and you've got, I don't know, you've got a beach and you've got deck chairs and hammocks, and nobody's doing any work. They've got pool tables and table tennis. You think, oh, that can't be the real world. They're not going to be like that. Well, I was very privileged to get invited along to their office in Victoria, and it's just like that. It's just like that. And the only reason I got an invite was because I knew someone whose son worked there, and we had lunch with him. All the food's free. You can eat breakfast, lunch, dinner there, all for free, all healthy food, and you can work whatever hours you want. But of course, you have targets to meet. So in practice, even though you could work how many hours you want, most people probably work longer hours than otherwise, because let's face it, you don't even have to go out to lunch. You're going to stay in the office, aren't you? So, and there wasn't many people making use of the table tennis or the pool table, but some were, and some were sleeping in a hammock. You know, because the thing about Google, they've got this very creative culture. They're not bothered about you working 9 to 5. They're bothered about results, and also they would have, like, I think they allow a few hours a week, don't they? At least, where you can just go and contemplate, think of ideas, be creative. This is an incredible culture, not like a typical 9 to 5 company. And that's what I think makes them stand out. And this isn't a company that's going to rest on their laurels and get overtaken by the next big thing. They're constantly looking to improve. And I think you've got to, as Jeff Bezos says, you've got to reinvent yourself constantly. Jeff Bezos says that Amazon reinvents itself every single day. And he predicted that Amazon one day will go out of business. Now, I don't personally think it ever will, but I do like his attitude, and it's the same with Google. I think the culture is a key thing that keeps them ahead of everybody else. What do you think, Carl?
Yeah, absolutely. I think one thing they absolutely nailed was the whole free services and but then being able to monetize it, isn't it? Because I think, yeah, we've all probably had Gmail accounts for years. Google Maps is absolutely brilliant, using it on our sat navs when you're driving, revolutionized driving, but that was all for free, wasn't it? You know, that's and you sort of think, God, how did they ever make money? But they've just been the masters of giving away really high quality products for free, and then but yet still being a highly successful cash machine. Yeah, and I think what's really good, how it touched on it, is they kind of go software first, but then wait, and then build the best sort of hardware as well to then have their software. Because if you think of their going down the mobile route, smartphones, you know, for a long time they pushed out their software, and it wasn't great to start with. It was on quite naff phones like the Motorola type phones, very sort of cheap end type phones, but they stuck at it, and then more and more phone companies just gave up and said, right, well, actually, let's use Android's operating system, because then we can get people from other phone companies onto us because it's the same operating system. People are using it, easy to transfer. And now eventually they've got to the point now where you could argue their actual phones, their Pixel phones, are just as good as quality is just as good as like an Apple phone. So it's amazing, really. But even if you don't go for the Google phone, 9 times out of 10 now, you're going to be using Google's services through another operator. I mean, even Apple paid Google a lot of money to be their search engine, didn't they, in the Apple phones? So yeah, it's amazing, really, the journey they've been on.
Yeah, I think...
what do you think, Awet? I think you jumped in already. Carry on.
Yeah, I think the key things I like about this company is the culture. I think a culture is always like, it's difficult to quantify, but the reality is they have an innovative culture, and that's why I think they're always willing to take risk. I think from history, what we learn is like, I think we discussed in our podcast last time about ASML. In the 70s, the Japanese companies failed. The reason they failed was they were risk averse. But Alphabet, in fact, is taking more risk, calculated risk, making several bets and winning. And I think recently what we discovered is that one of the founders, Sergey Byrne, if I'm pronouncing it correctly, he's back into the firm because they left the company and they want to do other ventures because they brought some CEO. But he's back into the system, into the company, because he's working in the company now because he can see this AI wave and the big revolution is coming. He came back to help. And it shows you the culture there. The management are still around. The founders is still around. And even the CEO, he is one of the key players for designing the Gmail and the Google Chrome. So it's still run by innovative people, still on the company, and moving the company to several areas. And I think, even if they lose market share on, Google search, there's a lot of bets that they're making. I think, especially healthcare. And if the cloud business is going to grow, all these AI businesses are built on their Google Cloud. Most of them, majority on Google Cloud. And this is like they're building the infrastructure for the next, human wave or technological wave. So when we look at that as well, considering there's a lot of people saying Alphabet is quite expensive. Of course, the valuation has been stretched. They are trading around 32 times earning and 53 times free cash flow. And the market is implying around 23% of free cash flow growth, which is a stretch. But the valuation doesn't take into consideration all these cultures, the loss-making investment that they're making, like in terms of like healthcare, drug discovery, and quantum computing. This is all loss-making businesses. So it's taking a lot of money. So that it doesn't reflect into the current valuation. Looking at that, I personally think Alphabet has a lot of way to grow. Even though it's a 4 trillion, I personally think there's a lot of upside here. When you compare that to the S&P 500, it's still trading at 30 times, Alphabet 32 times. So it's not expensive.
Now, of course, we've all been very effusive in our praise of Google, and maybe we're getting a bit carried away here because there are risks.
Yeah.
And I think, Carl, you'll know what I'm talking about. What's the number one risk to Google today?
I'll say there's probably 3 risks, but probably two of them are kind of interlinked. But one of the big ones is almost like too big. And if they're too big, you're going to get regulation risk.
Yes.
There's been many instances in the last few years where Google have been faced heavy fines and penalties from particularly EU governments have had to pay out a lot in terms of fines. And you've got to remember, Google, we said obviously great culture and everything, but they do store a lot of our data. And that is obviously always a risk to governments if a company has that much known about you. So, yeah, I think they're definitely on sort of regulators' radar. The bigger they become, the more they become a risk for governments, because they almost become a government in themselves, don't they? If they're running everything, regulators are just not going to like that. So there's always the risk that they are forced to split up eventually and become perhaps lots of smaller companies. Yeah. Obviously, the regulation, they won't like lack of competition. So again, if they do dominate certain markets, regulators won't like that. So it could be forced again to be broken up or not merging with other companies and things. So yeah, I think regulation is probably a number one risk. I think there's always that kind of security risk as well. I think a big tech company, particularly if you're the whole ecosystem, if someone can infiltrate that, particularly with all the data they hold, that's a big risk. It's almost like, if you're a terrorist now, you're going to go after some of these big tech companies, aren't you, rather than kind of countries. And then
quantum
I think
computing, Carl, computing could be a risk.
Quantum computing, yeah. So Awet's touching it. They are involved in that, but there's obviously specialists, quantum computing companies out there that do it day in, day out. And obviously, so I think that could be the next race. That could, we're still very early stages of quantum computing. We don't know how successful it's going to be, but if it does reach its potential, it changes the game for traditional computing. So then Google they're in a market, but how ahead are they? So do they have to eventually piggyback on someone else, or can they get their quantum computing levels up to speed? Because it'll be a game changer if it does come off. And I say the final risk I would say is kind of valuation. So or as good as the company is, you still have to kind of look at when you're going to go in to buy stock if you're planning to buy it. And obviously a company that's just had a 90% rise in share price in the last 12 months, you do have to just be very cautious because whilst longer term, it could still develop really good growth. Are you prepared to perhaps face that kind of shock in the short term, just because it may be slightly overvalued compared to history? That's just your judgment. You just have to make that call.
Good point. Thanks for that, Awet. Sorry, Carl. There's three reasons you gave there. I could only think of one, which was the government risk of splitting them up, which is, of course, what has happened in America. When Standard Oil, about 100 years ago, were the dominant oil company in America, and they got broken up. So it could happen. I'm going to ask you a very unfair question, Awet. Are there any other risks? Because I can't think of any.
There's several. I think what you mentioned, Tony, as well, in terms of like the antitrust, Google being a monopoly. I think recently there was a court case. It was in favorable for Alphabet because Alphabet can justify that, there are new entrants like ChatGPT and so on. So it was in
Yeah.
favorable for Alphabet. But one thing you discover is Alphabet is pretty much, investing a lot of in this AI. In the last 2025, they invested 75 billion, and the market is concerned, are they be able to justify this cost? They are investing aggressively in AI, building data centers and building the infrastructure first. So there is a lot of capital is going there. I think the biggest risk as well, are they be able to monetize the investment that they're making? In my view, they
Yeah.
will. At some
Good
point, they
point.
will.
Good point.
Yeah, and the investors are concerning because it's not showing up into their into their profitability yet. But I do think at some point in the future that will show up into their balance sheet. In terms of quantum computing, I think Tony you touched on and Carl and mentioned it, is quantum computing, even because quantum computing is going to be like it will be lived in the cloud. It will be as a service provided for us. It's not, we're not going to have quantum computing each. Alphabet control the cloud, right? So if they advance with quantum computing, is more likely to be they will integrate with their ecosystem, and we will, Alphabet will be one of the biggest beneficiary on this quantum computing as well. So there is a lot of things that you can like about this company, but the reality is the risk is always going to remain the same. Even if you break Alphabet, I personally think the valuation would be a lot more higher than its current
Yes.
valuation. So if you break it, is in fact is more favorable for the investors. The last risk I could think of is I think they made an acquisition of Wiz right recently, and the acquisition it was around for 32 billion. So cash transaction that's not fully completed yet. I think there is a pending regulatory approval by 2026. There is, if that doesn't go through, because Alphabet they are pretty much one of the leading cybersecurity in terms of the cloud security, not the security that we normally. So they are trying to expand their ecosystem there. So if that doesn't go through as well, that could be disappointing for investors. But overall, I personally think I'm quite optimistic. The risk is they are aware of this risk. And that's why we can see recently that Google Gemini 3, the breakthrough, when it came up, the market was shocked because they were thinking Alphabet is behind. But Alphabet is, there's a lot of risk to take to just bring some model doesn't work. Where OpenAI, they are a new company. The risk for them is smaller. They can come up with, they can take big risk. But with Alphabet, they will have to make sure the risk is calculated. And when they bring models to the market, they will make sure they are the right one, they are tested, and they're robust. So they are pretty much watching the market, but when they bring models, they are always, something better and sustainable. Alphabet has been proven the market time and time again to just bring better models, to just keep reinventing. And I think they will continue to do so.
I suppose the other the risk I've just thought of, which is kind of obvious, really, is if the culture changes. Because certainly when the visionary founder owners move on, quite often that is the case. So there's no guarantee they'll keep the culture. I hope they do.
Mhm.
So that is something that could happen in the future, basically.
I think as well, managing a transition from search, purely search revenue.
Yeah.
Like to say, remember, Google survives based on their revenue from search. So it's how quickly are people going to move away from search to other things, and how quickly can Google monetize sort of the AI elements of it. That's
you can't help wondering if the only way AI is going to make any money is if they introduce advertising, much like social media companies.
Yeah, but if you think if Google starts, so if everyone stops using Google search and we're all now using Gemini or ChatGPT, obviously the likes of Microsoft, they don't make their money from search, so they can still continue to give away that product for free. But if you find the Gemini version starts bombarding you with adverts, you're going to be like, no, I'm not going to use Gemini. I'm going to use Microsoft Copilot or ChatGPT. And then how do Google keep that revenue from search without annoying the end customer? That's the difficulty, isn't it?
Yeah, true.
I think in terms of how they will monetize that is they will give you two options. Either you would be happy to use the cheaper version with more advertisement, or you pay premium to use a service that doesn't have advertisement, but you pay a lot of money for it. So I'm sure, I think from people that I spoke to, most people that I spoke to, they they highly value using artificial intelligence, especially government raising tax and so on. It's becoming difficult or expensive to employ people. Companies would favor more likely to use AI. Even I spoke to a few people and they said, even if they will raise a price, they're more likely to just continue to buy, to subscribe for AI, using AI. So yeah, I think either way they will monetize it, because once we remember they are training things now, and they are hooking us, because this is the technology has been. We've never seen a technology adopted this fast and this much in history. So this is one of the most adopted technology in the last few years, in historically. So they will, once we are adopting this technology, they will, they raise the price, and I think we would have no choice but to pay the premium.
Yeah. Okay, guys, I think we've covered most of what we need to cover. But if you do have any comments you're dying to give to us, now's your chance before I end the show. Over to you, Carl.
Yeah, no, I just think Alphabet's one of those companies that I think, I would still class this as a growth company. So if you're over the long term, next 10 years, I'd predict double-digit investment returns. The only thing I would just say right at this minute, at time of recording, is just be a bit wary of the valuation point.
Yeah.
It's not such an issue if you're going to hold it for 10 years. But if you're someone that's doesn't like volatility, when you look at the share price chart and you've seen it spike up this much in this short space of time, inevitably there's usually a bit of a pullback. So just be wary of that. But overall, yes, it's a great company.
I think we know we know what your opinion
this
is.
This is one of the most powerful company, I think. Even if any company can monetize from this, healthcare, for example, streaming, YouTube, you have healthcare, which is one of Google lab called Isomorphic Lab. I don't know how to pronounce this, but there's a lot of potential for drug discovery early on. And I think there's a lot to like with Alphabet, so much potential. And in the long term, you only need a few of them to work. So I'm quite optimistic in the long run, but in the short term, as we say, the market can react, adversely. But in the long term, I do think Alphabet would emerge from this AI wave strongly.
Sure. Okay. Well, I think the listeners of this show get what we favour. We're all fans of Google, or Alphabet as they're better known these days. Hope you found it really useful to help you with your own research. We'll have all the links in the show notes, and including a one-page company snapshot of Alphabet, which I think you'll find very useful. Please do avail yourself of that. Help you with your own research. Our next episode is going to be on Rolls-Royce, of course, a famous British company, but there'll be some very interesting aspects that you won't be expecting in that show. So no pressure on you then, Carl. So if you're listening on the Apple podcast, please do give us a review. We really, really appreciate it. It really helps us to boost our subscribers, which we're keen to do, and invite along very good quality guests to be interviewed. So without any further ado, we'll end the show today. Thanks very much, Carl and Awet, for your great contributions as ever. And to the listeners, have a great day, and we welcome you to the next episode on Rolls-Royce. Bye for now.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.